Hey guys, hope you're doing all right. So today we're looking at TransMedics Group. It's one company that I just recently discovered, and I've been watching it ever since. And it's looking like it's a really interesting company, right? But let's take a look at the stock price first. So we can see that a long-term support here, where there's a lot of volume, is right here around $30, and the next one is around $70+. So currently it is trading at $62, and it did run up a lot, but the growth rates have been a little disappointing and a little worrying for investors. So the stock has been punished greatly because of that. Look at this huge gap down, just absolutely, horrible downtrend. But let's take a look at historically, what has this stock done? So back here in 2021, we saw a 72% decrease from its all-time highs back in the day. So if you zoom in, you pretend you're in 2021, you see this and you're like, man, that's a huge drop, 72%. Wonder if this company is going to recover. And sure enough, it does recover, surging to all-time highs. Buying stocks of publicly traded companies is fantastic. But you know what else is great? Owning your own company. That's where today's sponsor, Limits Express, comes in. They will completely manage an Amazon store just for you, where you can sell products like Colgate's toothpaste, Crest mouthwash, Dove soap. In order to buy these products for a bulk discount for very cheap prices, they have to spend more than $750,000 a month with these suppliers. And that's where you and 150 other clients come in to pool your money and to buy these products at a very cheap rate to sell at a higher rate. The key thing is Limits Express doesn't make any money unless you do. You supply the capital for the inventory, and they do all the heavy lifting, and you get to share the profits together. So I would never take a sponsorship from a business I don't believe in, and Amazon FBA is a completely viable strategy. And thing is, Limits Express has a team dedicated with experience to help you start your own Amazon store. So if you're interested in starting your own Amazon store and making passive income, use the link below to book a 30-minute Zoom call with their co-founder, Kyle. And you can also check out their website down below. And then we get another down 60%. So another question comes up. Is this company going to recover? Are the growth rates going to continue? Well, it looks like it does, right? So now it's all the way back up and we get another down 60%. So this is almost like 70% drops every single time this happens. And what do you know? It recovers. So TransMedics Group, if you don't know, they help with transporting organs. So they do this by maintaining a stable body kind of environment for the organ, so it's not like freezing them. This usually comes with better patient outcomes and all that kind of stuff. So they did recently purchase some jets, so they are doing a lot more long distance transportation of these organs, and it's a big market. I know that in many countries that there's a lot of need for this service. So again, recently nothing big has happened. There's nothing crazy going on. There's no scandals. There's nothing causing this drop. It's just the growth rate, right? Sometimes the stock just gets out of hand. It's too hyped on the price and it just goes up, and there's a quarter that they don't deliver. There's something with the numbers that causes the stock to drop down. Investors are running away. So we see this happen, and history doesn't always repeat itself. It rhymes. So we don't know if it's going to recover, but looking at the company and studying the fundamentals, it really does seem like it's a solid company. And if you were watching it, back here, if you like the stock, then I think it definitely deserves a better, a second look at this company. So for me, I think I would start selling cash secured puts on it, get paid to buy the stock and make an income, right? So this is a strategy I would do. I think it has pretty good premiums. I don't have it open up right now, but I was checking up on it. So it definitely does have good premiums, especially if you can catch it on a red day. So yeah. I saw this post on X. It's pretty funny. Here is the primary competitor to TransMedics Groups, and it's a cooler. So obviously this is how people transported organs previously, and it's a very crude method, but it worked. It worked. It's not a very effective method or the safest method. But you can say this about a lot of different companies, a lot of companies that are innovating, that are improving on existing products and stuff like that. So it's really funny. It is funny, but at the same time, they are doing something different. They are improving on this organ transplantation service. So yeah, just the numbers were not great. They're still growing for sure, but they're not growing at the level that the stock permits them to. So that's why it got beaten down all the way down here. So let's run some numbers. I like to look at the basics, right? First, you need to look at the basics and really understand what the company is worth. So now it's $62. Let's run the PE. So 62 divided by 0.97 is a PE of 63. It's about $1 per share, right? So that's the 2024 PE. It's very high. This can only be sustained if they have really high growth rates, right? Above 40%. But let's look at 2025, the forward PE. Dude, 62 divided by, we have 42. A PE of 40 with a growing company with good growth rates and profitability is pretty reasonable depending on what sector, what market they're in. Let's take a look at 2026 numbers. So now with the forward PE being at 26, this is a little bit more reasonable. So by the time of 2026, if they're still growing at a decent pace, 20, 30, 40, 50% on their revenue, they're still profitable, and they are hitting these EPS targets, then you're going to be buying at a 26 PE for 2026 numbers. So for me, I think this company does have a bright future. I think that they have proven that they can stomach, all of these drops, and they just recover because they are a growing company. And there's going to be a lot of overreactions, right? It's a very small cap. Right now, it's at 2 billion. So back here, it was 6 billion, right? 3 times 60, about, right, 6 billion. But at this point, it's a $2 billion company. It's looking a little bit more attractive at this price. And, I would start selling puts on this company. I don't think I would go in just buy a bunch of shares, but selling puts allows me to make income on this company and also potentially own the shares in the future. So yeah, I think it's very possible that we do see a pop back and the stock gets more respect. But definitely towards the end of the year, there's a lot of tax loss harvesting, which is definitely going on with this stock because of its performance toward the last half of this year. So yeah, definitely let me know what you think about this company. What do you think about the stock in general? And would you buy it? All right. Thank you guys so much for watching. Please like and subscribe, and I'll see you guys next time. Bye.